The stock market got off on a good foot for 2017. Equities rose on this first major trading day of the new year. Early in the day, the Dow came within about 100 points of that yet-to-be-touched 20,000 level, flirting with it as it did for the past couple of weeks. But as oil prices slipped, so did stock prices. The blue chip index added 119. It closed at 19,881. NASDAQ was up 45, and the S&P 500 advanced 19, rising on the first trading day of a new year for the first time since 2013. But with the sharp and steep rise in the stock market over the past couple of months, many investors are wrestling with one big question. Will this be the year of the bull's big finale? Mike Santoli takes a look.
Stocks are showing new life as 2017 gets underway. The major U.S. indexes hit record highs starting in July after moving sideways for more than a year. And confidence has surged among investors and consumers after the election of a president promising business-friendly policies. While these upbeat trends seem to have some momentum, investors should probably view any further gains for stocks as a spirited latter phase of this bull market, not the start of a multi-year boom. While some are comparing this market moment to the dawn of the Reagan era in the early 1980s, when tax cuts and a new bull market helped revive American capitalism, the Trump administration will begin against a far different backdrop. The S&P 500 is up some 230% since March 2009. The index has had a positive return in each of the past 8 calendar years, one shy of the record 9-year streak from the 90s. Unemployment is already near historic lows, and while growth expectations are perking up, stocks now appear fully valued compared to corporate profits, even if earnings continue to rebound as expected. All this suggests to some market observers that any significant upside might have to come from a classic euphoria phase of this bull market, when the public embraces stocks with enthusiasm and drives indexes up toward an extreme. The upturn in confidence surveys and a rush of investor cash from bonds into stocks late last year are hints that such a trend might be underway. Of course, there's no science to pinpointing where we are in the market's life cycle. The economy might simply continue grinding slowly ahead and carry stock prices with them. Or perhaps inflation fears, a strong U.S. dollar, and possible trade tensions could unnerve world markets and derail that confidence trade. However things turn out, it's probably best not to expect several more years of smooth gains for stocks, which, after all, have been doing quite well even as the public debate has focused on the economy's weak spots. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.